All right, let's talk about the stock market. It's this huge, complex thing we hear about every single day. But what is it, really? We're going to break down how it started, how it actually functions, and yeah, the incredibly high-stakes game it represents for millions of people.
But you know what? Let's not start with definitions. Let's start with a story. It kicks off way back in 1973 with a 14-year-old kid who, after facing some personal tragedy and flunking his exams, decided, you know what? I'm going to follow my family into the world of stocks.
And this isn't just any story. This is the story of Vijay Kedia, a name that today, well, it's pretty much legendary in the Indian market.
So, at just 19 years old, he jumps into trading. And at first, he's winning. He's making money. And he probably felt like he'd cracked the code, invincible. But that kind of overconfidence, it led to one single catastrophic trade that didn't just wipe him out. It pushed him deep into debt.
For years, this was his life. A total roller coaster of winning big and then losing it all again. It was like a game of snakes and ladders. But then, finally, he made a decision that would change everything. He decided to stop gambling on the daily ups and downs and start investing in businesses for the long haul.
So, in 2004, he took his savings and put it all into 3 companies he really believed in. And get this, over the next 10 years, that single change in strategy from a trader to an investor turned his investment into 100 times what he started with. 100 times.
That one shift, it completely rewrote his story, leading to a net worth today of over 1,700 crore rupees. So that begs the question, right? What is this incredibly powerful system that can create and, just as easily, destroy wealth on such a mind-boggling scale? Okay, to really get our heads around the stock market, we've got to go back, way back. And believe it or not, it all started because people needed a way to fund these massive, and I mean incredibly risky, sea voyages.
Seriously, from Dutch spice merchants back in the 1600s who couldn't afford to lose a whole ship, to brokers gathering under a banyan tree in Mumbai in the 1800s, the core idea has always been the same: raise a ton of money by selling off tiny little pieces of ownership to the public.
But okay, how does that actually happen? How does a private business, let's say a really successful local food joint, end up on a giant stock exchange where anyone can buy a piece of it? Let's walk through that. The whole process is called an IPO, an initial public offering, and it's a pretty intense journey. First, that successful shop gets ambitious. It wants to go nationwide, but that takes a ton of cash. So the owner makes a big decision. Let's sell small pieces of the company to the public. But you can't just do that. You need regulatory approval from SEBI, which means opening up all your financial books for them to inspect. Then comes the really interesting part, price discovery. Basically, they figure out how much people are willing to pay for a single share. And only after all that, finally, comes the listing. The company is officially on an exchange. And just like that, you, me, anyone can become a part owner.
So once a company's on the market, its price starts to, well, it starts to dance. Up one second, down the next. So what in the world is driving all of this constant, frantic movement?
When you strip everything else away, it really just boils down to one simple thing: supply and demand. Think about it. If way more people want to buy a share than sell it, the price has to go up to tempt a seller. And if everyone's trying to sell and nobody's buying, the price has to drop to find a buyer. That's it. That's the fundamental, raw engine of the market. But what drives that demand? Oh man, pretty much everything. Of course, there's the company's actual performance. Are they making good products? Are they profitable? But there's also the health of the whole economy, political news, new technology, and sometimes, honestly, it's just plain old rumors and human emotion. So to get a quick feel for how the market is doing overall, we use these things called indexes. Here in India, the big ones are the Sensex and the Nifty 50. They're basically just a health checkup. They track how the biggest companies are doing, which gives us a general idea of which way the wind is blowing that day. Now this is where it gets really interesting. It's how people approach this whole system. Because for some people, it's a tool for patiently building wealth over a lifetime. But for others, it's something very, very different. I mean, what if the dream isn't about owning a piece of a great company for years? What if the dream is just about getting rich overnight? What happens when people start betting their life savings not on a business, but on pure blind luck? Well, unfortunately, that's exactly what's happening in a super high-risk corner of the market called futures and options. A recent report from the regulator, SEBI, dropped an absolutely shocking statistic. In F&O trading, a staggering 9 out of every 10 individuals lose money.
It's just a brutal environment. It's incredibly complex. People use borrowed money, which magnifies every loss, and it forces you to make split-second emotional decisions.
And the scale of these losses, it's almost hard to comprehend. We are talking about 1.8 lakh crore rupees. That's how much money everyday retail traders lost in just a couple of years. It's an almost unimaginable amount of wealth that just vanished from their accounts.
So here's the crucial takeaway. While long-term investing, the path Vijay Kediye eventually found, is about owning a piece of a growing business, this kind of high-risk speculative trading, it often becomes a zero-sum game. Wealth isn't being created, it's just moving from the pockets of the many into the hands of a select few.
Look, the stock market is an undeniably powerful force. It impacts all of our lives, whether we're in it or not. But whether it ends up being a tool for building long-term wealth or a machine for losing it all, well, it seems that choice really comes down to one thing: patience or luck.